Noah, I got to be honest with you, my friend, and this may not come as a shock to you, but I am not an economist. And the reason I say that is because I feel like a lot of people in the staffing and recruiting industry are in a very similar boat and a very similar situation to me. We read the reports that you and your team put out at ASA. We might read the local news. We might read even national news, but we don't keep our ears low to the ground as we should. And I know that. And I know a lot of staffing professionals that listen to this show know that as well. So I'd love for you to get us started in answering this one, what I think is simple question, but it's probably not so simple of an answer. When you think about the average staffing and recruiting professional, what's the one thing that comes to mind that people should know about the current labor market?
Yeah, that's a really good question, Brad. So, the one thing that I would say that just about every staffing company needs to know is that you need to do a lot more work to get the orders that you once were able to get 3-4 years ago without even really lifting up the phone. The thing that a lot of people don't really realize is that we still have not fully recovered from the coronavirus pandemic in terms of the sheer disruptions that it's caused to the economy. Because of the significant threats that the shutdown posed to employment, we ended up putting out massive amounts of fiscal stimuli, which encouraged employers to essentially keep their workers. But there was a trade-off to that, and that was that it also led to a significant increase in prices or inflation. And that's why we saw inflation go up to like 8-9%. And because that's really high for most consumers and businesses to cope with, Federal Reserve also had to raise interest rates. So that way they would tamper down on inflation. Now, here's the thing. When you have high inflation and you have high interest rates, what that means is that the cost of bringing on another employee onto your payrolls also increases. Think about the paycheck that worker is going to be asking for, or the compensation packages that are going to need to be tailored to today's cost of living. And so right now where we find ourselves is that because of the sheer increase in inflation as well as interest rates resulting from the pandemic, what a lot of employers are feeling right now is that they're looking for any excuse not to hire more workers than they need. And if you think about our industry as like a matchmaker, we do well when employers are seeking employees and employees are seeking new opportunities. Right now, there isn't a whole lot of appetite amongst employers to hire more employees, and employees are not really certain about their chances on the labor market in terms of finding a new opportunity. And so that's why staffing companies need to work much harder when it comes to not only proving their value to clients, but then also being able to position themselves for the future when conditions do finally ease and we do start to see a more genuine rebound in hiring as well as job creation.
Isn't the skepticism of bringing on more or additional employees an advantage for a staffing firm? Isn't that feeds in right well into what it is that we do and the services that we offer?
Absolutely it does. But the issue is that are those employees going to see demand from employers within the broader economy at large? What we know is that the majority of employers right now are just not looking to hire. There's two exceptions to this rule. Occupations and industries that are seeing a significant amount of turnover in terms of personnel, like healthcare, they're still looking to hire, even though employers are facing higher labor costs because they simply need to backfill roles. Additionally, there are some occupations and industries that are just seeing increased demand despite this low churn sort of environment. And one example of that would be this focus on productivity and artificial intelligence. That's leading to a significant amount of demand for computer scientists, for mathematicians, for folks who know how to channel these technologies and help companies achieve their bottom line. So therefore, if you're a staffing company whose talent bench is primarily comprised of these sort of high-skilled folks, you're going to continue to see a lot of demand for new orders. And so those two exceptions aside, the majority of staffing companies have to cope with an environment where your average employer just is not really looking to bring on additional talent.
I saw a report today, just this morning, that said the United States is going to need 320,000 new welders by 2029. I don't know if you've seen that data, but it caught me by surprise. A client actually shared it with me. Are you seeing more demand right now, sort of in that blue collar work?
So that's really interesting. A lot of these studies, including the one that you mentioned, look at the disruptive effects of artificial intelligence and this productivity boom that we're seeing within the time span of 5 to 10 years. And absolutely, that is going to be the case. Because if you look at where AI is right now, it's very much functioning as a glorified research assistant. So therefore, roles that, primarily revolve around being able to gather, assimilate, and present information, those are the ones that are at the edge of the cutting board, so to speak. Now, here's the interesting tidbit for the staffing industry. About 40% of all temporary workers right now function within production occupations or transportation and warehousing occupations. And so, what that means is that right now, if you were to gather the talent benches of every staffing company within the United States, you actually have a lot more temporary workers who do have those sorts of skills to be welders or to, be able to supplement some of these research related functions that are on the chopping block due to the disruptions caused by artificial intelligence. And so therefore, in the time span of 5 to 10 years, what we could see is that as demand for work shifts towards blue collar occupations, as well as these sort of tasks that involve being able to do things physically or being able to, say, supplement the research process, that could lead to new avenues of demand for the staffing industry and fundamentally change the composition of workers who are entering the space.
What does that mean for the average owner?
Yeah, so that's a really good question. Right now, owners are in a very tricky spot because they need to not only figure out what employers are seeking right now and where they're going to be 2 to 3 years down the road. And so therefore, when it comes to getting through this current trough within our industry, a lot of staffing owners need to have a good handle on what their clients are seeking right now, where they need to backfill, what they're looking to do in terms of expanding, in terms of their business plans. And so to do that, that involves having your ear to the ground on not even just national economic trends, but local economic trends. If you are supplying workers to, say, an auto plant, and you do know that, we recently had changes to the tax bill, staffing companies need to be on top of how those tax changes are going to affect the amount of employees that these auto manufacturers are going to be able to employ, or even how much these auto manufacturers are going to be able to save and potentially pivot towards labor investments because of, these changes in the tax code. And so being able to keep your ear to the ground in terms of these economic trends that we're seeing, so that way you can stay one step ahead of your clients, that is incredibly important for owners.
Yeah, I mean, from a marketing standpoint, that's where my mindset goes is if we're going to educate our clients or our prospects on what it is that we know that they don't, it's a good angle as it comes to selling our services, right? And I put selling in finger quotes here on the video. I know you can't hear that on the podcast side of things, but if we're going to sell our services, we need to basically walk the walk and talk the talk. And if we can talk in our client's language and we can say things and articulate things in the way that they don't even know them yet because our ear is essentially lower to the ground than theirs, it gives us a level playing field, if not even an advantage in talking with those individuals.
No, you're absolutely right, Brad. I mean, I think some folks forget that our superpower as an industry is not our talent benches, it's our knowledge of labor trends and being able to effectively marshal, labor resources for our clients. And so therefore, what we're seeing within our own industry is that a lot of staffing companies are pivoting towards these sort of knowledge-based assignments, things like consulting or executive coaching, being able to demonstrate their value as an external human resources function to their clients in all aspects of personnel management. And I think that that's not only demonstrating the value that our industry continues to bring to employers within the economy at large, but it's also helping us to a significant degree weather this trough in labor until conditions improve. So that way we're seeing more churn within the labor market.
Yeah, I'm sitting here thinking about the average owner who, again, is not paying close enough attention to this data, is not paying close enough attention to the local labor market, local data, who is just sort of going through the hamster wheel, right? This is the type of staffing we do. This is who we serve. This is our ICP, our ideal customer profile, and this is the type of person that we serve in Buffalo, New York, for example, where I am. And no, I think a lot of what you're alluding to is understanding the labor market so well in your area where you have the advantage in the short term and also the advantage in the long term.
That's right. I mean, you don't even need to necessarily be an economist to be able to, make connections between, say, what's going on at a state level, federal level in terms of economic policy, and to think about how that's going to impact your clients. Additionally, these broader trends that we're seeing, such as artificial intelligence, there's plenty of research out there where, folks who are way smarter than me, they're able to quantify, say, the effects of, say, a chatbot on the augmentation or the automation process for a given occupation. That's the kind of data and research and intellectual curiosity that staffing companies and their owners really need to be on top of in order to demonstrate that value add for their clients.
What should we know about immigration? So again, paint the picture in the sense of someone like myself who doesn't keep their ear that low to the ground in terms of economics, the average owner or the average staffing professional who, again, knows this should be a primary focus of their day. We should be looking at this data. We should be looking at these trends. What should we know about immigration as it relates to, I guess, 2026?
That's a really good question, Brad. So this is also a perfect example about how economics is just about making simple connections. Immigration, especially in the context of politics today, basically alludes to the fact that we have an administration that is leaning towards more enforcement of current immigration protocols, and what that's leading to is an exodus of workers from the labor force because they do not have all the proper paperwork, or they're being, in one way or another, swept into these current enforcement efforts. And so what that means is that these labor shortages are going to cause an opening for staffing companies to be able to backfill some of these roles. And again, we talked about higher labor costs. When employers are seeing a substantial exodus in their personnel due to increased immigration enforcement, they're still going to be willing to pay higher labor costs just so that way they can have the personnel on hand that they need. And so therefore, what we're seeing is that within certain industries like agriculture, but also within industrials, that would include manufacturing as well as transportation and warehousing, these stepped up immigration enforcement efforts are causing these sorts of pockets of labor demand, which is prompting employers to rely on staffing services to be able to backfill these roles.
Do we have enough people for all the jobs we have available? Like if you think about the mass exodus that you're talking about in terms of immigration, you talk about a retiring population, you think about all the demographics that are not be in the labor market in, let's say, 3 years, 5 years. Do we have enough people within the United States to fill the jobs that we will eventually have or currently have?
So that's a really good question. And actually, I'm going to answer a sort of different question right now. And that is that if you look at the statistics today, our economy is simply not producing enough jobs for the number of people who are seeking those jobs. So that includes everybody from the class of 2025, all of your folks who are being caught up within the current layoff efforts. We just do not have enough positions available. And so I think one of the offsetting factors, maybe say 5-10 years down the road, that's going to come from this lower level of job creation due to, say, artificial intelligence and employers' hesitance to hire more because of labor costs, is probably going to come from these trends that we're seeing within an aging population, increased retirements from the workforce. I think that we're going to soon reach a new steady state within the labor market where we're not going to be creating as many jobs, but also we're not going to be having as many people coming into the workforce. Usually what you hear is that when it comes to, say, the retirements crisis that we're seeing, is that we're not seeing enough replacement amongst workers. But then conversely, we also see a lot that when it comes to artificial intelligence, that it's simply cutting down too many jobs, even though we still have a large labor force. And so I think that both those trends are going to work in tandem. And so we are going to find a steady state where, productivity is going to slow job growth, but also because of, these changing demographics that we're seeing, it's also going to lead to fewer amounts of people coming into the labor force and competing for those jobs.
What else is your team paying close attention to right now? I know we've talked about immigration, we've talked about aging populations, we've talked a little bit about AI. What are you paying close attention to?
That's a really good question. So, starting in 2025, I used to tell a lot of staffing companies that there are really four things that I like to monitor: taxes, trade, regulation, and immigration policy, or TRIPS for short. And so, we've already talked quite a bit about immigration as well as artificial intelligence. But when it comes to thinking about what is going to really move the needle for our industry at large, it's going to be a bigger recovery within the labor market, where employers are going to be less inhibited by higher labor costs due to inflation and interest
Mhm.
rates and even tariffs. And so, because of that, essentially what we are really looking at is ways that employers are going to be able to keep more money in their pockets, so that way they can make those necessary investments in labor. And so there's really two ways of doing that. The first is policies that allow for companies to retain more capital. And so one such policy is the One Big Beautiful Bill that got passed this summer. What we saw was that there were a lot of business friendly tax provisions that are not only going to benefit staffing companies in terms of their operating costs, but is also going to help their clients in terms of the amount of money that they're saving every year. And so we could see increased investment within labor because employers are going to be more interested in having that extra capital to be able to spend on labor. The other way that you can get employers to start hiring more is by reducing their labor costs up front. And so that would include a decrease in interest rates. And so, good news for us as well as the economy at large, the Federal Reserve has kind of shifted gears in terms of instead of focusing on keeping interest rates high to tame inflation, they're lowering interest rates in order to stabilize the labor market. They've instituted two cuts this year. There's a good possibility that they would enact a third cut. Unfortunately, I'm not a voting member, so I can't say for sure. And basically, if because interest rates tend to take between 3 to 6 months to be fully realized within the economy and within employers' decision making, what we could see in 2026 increase in labor churn because companies are beginning to also feel the effects of lower interest rates.
Understood. So increased labor turn. What then would that mean for our industry specifically? Hey, it's Brad taking a short break to tell you about an offer exclusive to listeners of Take the Stage. 30 minutes of strategic marketing consultation with me, completely free. Hey, whether you're looking to drive more sales or more job applications, I want to help. Visit bit.ly/stage offer. Pick a time that works best for you. That's it. Again, whether you want to drive more applications or more job orders, I want to help. That's bit.ly/stage offer. All right, let's get back to the show.
Well, so again, thinking about our industry as a matchmaker, when we see greater interest from employers to hire more workers, then that is going to allow for, say, more new orders to come through the pipeline. And so I think that once our labor market begins to demonstrate a more sustainable recovery, that's going to be when new orders and new business opportunities begin filtering down to our industry.
Is that just an opportunity then of sort of this hurry up and wait kind of methodology? I've heard on just about every call that, things are going to turn around. Things are going to turn around. Things are going to shift. We're living in this uncertain time. We're living amongst uncertainty. If I took out stock in the word uncertainty back in January, no, I would be a rich man. If I got paid for every time I heard uncertainty on a phone call, I would be a very wealthy man. Is this sort of just an opportunity though, where we really do need to sort of just sit and wait and see what happens?
Absolutely not, Brad. So we definitely have uncertainty in the economy, but it's about finding those opportunities in an uncertain environment in order to be able to demonstrate your value and still grow as not only companies, but also as an industry. So, to your point, if I invested in what's called the Economic Policy Uncertainty Index, it was built by a couple of well-known economists out in Stanford. Basically, that index jumped about 400% over the past year alone. And a lot of it was due to the fact that we had a significant change in political dynamics here in Washington, D.C. And because of that, even though our industry had gone into this year thinking, okay, inflation is coming down, we're going to see lower labor costs, employers are going to be a little bit more confident about hiring again, we also had sorts of other sorts of trends that gave employers cause for pause. That would include changes in immigration policy, the tariffs, etc. And so therefore, despite the fact that there is a continued uncertainty, which is causing this paralysis amongst employers in general when it comes to adding to, this is where staffing companies can still find opportunities within their particular industry or niches, so that way they can demonstrate value to clients. I mean, perfect example, we still know that the artificial intelligence boom is causing increased demand for folks with computer science backgrounds and folks with those sort of high skilled service areas. And so that is an opportunity for our engineering, IT, and scientific services vertical to really capitalize on that demand. Additionally, what we know is that even though, say, the industrial space is really being hammered by inflation, by interest rates, by operating costs due to tariffs, there is still some tailwinds that are being driven by immigration. And so those are also opportunities for staffing companies to be able to come in and assist clients that are being caught up there. So therefore, there are always opportunities despite these overarching trends of uncertainty. And it's about, being able to spot those and then being able to demonstrate how you can add value.
I think that's what the best staffing and recruiting firms are doing differently right now. They're on the offensive. They're on the attack. They're understanding, yes, there is uncertainty. Yes, it is hard to close orders right now. I've heard it takes, 3 times the work for half the results, but not accepting that and not saying, okay, well, I guess we'll wait till 2026. I guess we'll wait and see what happens, because that's not good business. I think the best staffing and recruiting firms are saying, yes, these are the cards we're being dealt, and here's how we're going to play them. And it might not be how we played them last time these cards were dealt this way, but it's how we're going to play them now.
Yeah. I was reading this very interesting statistic. It was looking at the composition of industry revenue over the last 20 years. And up until about 2017, 2018, about 80% of industry revenue came from the traditional staffing model, the one that's worked for us since the 90s. And, that traditional staffing component now comprises about 60% of total industry revenue. So where are those other sources of revenue? Well, it's temp to perm conversions, it's long-term staffing, it's direct to hire. Those are these new models that are seeing increased attention because of these different conditions that our economy faces, and are probably not going to go away in terms of their outsized contributions to the financial prospects of our industry, just given the fact that so much is changing about how employers and how staffing companies' clients are approaching their labor needs.
No, you mentioned there were 4 areas that you, I guess, analyze and research pretty closely. I think we touched on 3 of them. What was the 4th one?
So TRIPS, that would be taxes, trade, immigration, and regulation policy.
Cool. You want to talk about any of those? We touched on immigration. I apologize. We touched on immigration.
Yeah.
Which one did we miss?
Mm-hmm. Well, so I guess we haven't necessarily talked too much about regulation, and regulation is perhaps the most vague. But, again, kind of being able to piece together patterns, right? We have an administration and also a Congress which is very skeptical about a lot of workplace regulation. Now, not really delving into the merits of regulation itself, what we do know is that with a deregulatory slant that we have in our current political system, that's also going to not only free up more capital for employers when it does come to how much they are retaining that they could possibly divert towards labor, but then also it could suggest that employers are able to begin thinking about adding more workers if there are less considerations that they need to make themselves. And so that just presents another opportunity for staffing companies to be able to consider, what are going to be the specific regulations or regulatory rollbacks that my vertical is going to see, and how can I step in and demonstrate the value that I provide for my clients.
No, when we look to 2026, what's the one thing a staffing owner should be incredibly mindful of heading into the new year?
Yeah, that's a really good question, Brad. There's quite a bit of reason to have optimism if you're in the staffing industry right now, particularly because of some of these tailwinds that are coming down the pipeline, both in terms of changes to the tax code as well as lower borrowing costs from the Federal Reserve. So, what that means is that we are likely going to see an increase in the amount of churn that we're seeing in the labor market, driven by a greater appetite amongst employers to be able to hire. The question is, where are they going to be looking to add personnel? And I think that artificial intelligence is going to be perhaps the biggest determinant of what occupations and industries begin to exhibit the first signs of recovery. And so, therefore, if I'm a staffing company, I want to be able to know what my clients are thinking about as far as how they've been able to utilize these technologies in terms of the tasks that they are able to complete on their own versus what they're still relying on labor to do. And so that's really going to guide how I'm able to build out my talent benches, what I'm looking for in terms of the candidates that I'm acquiring. So that way, when it does come down to being able to secure a new order, I'm very specifically targeting those aspects of my clients' work that, do not have readily available artificial, no pun intended, alternatives in the market.
No, what's your team working on right now? So I know at ASA, you're always doing extensive research. You're putting together great reports. You're putting together great publications, whether that's through actual print publications, preparing for Staffing World or any of the other conferences. What are you and your team working on that the average listener should know?
Yeah, so Brad, we put together a lot of resources, both for members and non-members, that basically highlight, our insights to both the staffing industry and the labor market at large. Now, the first resource that I'm going to mention to you, it's again, members and non-members have access to it. You can find it on our website. Is our staffing industry playbook. This is sponsored by Benefits in a Card. And basically, this comprises about 50 or so odd trends that we're seeing within the labor market and industry that we believe every staffing owner needs to know for 2026. Everything from how different verticals are performing in terms of temporary and contract employment, all the way to the impact of artificial intelligence within different occupations. Additionally, every week we put together what's called the weekly staffing index. This is much more granular than any sort of data that you'd get from the Bureau of Labor Statistics, and also was recently mentioned as one of 4 specific labor market indicators to look at, even when the federal government had that data blackout because of the shutdown that we had. So the weekly staffing index, as well as the staffing industry playbook, 2 trends that anybody can take a look at. Additionally, if you're a member, we also have other resources that are just as valuable. We have a quarterly sales and employment survey, which we encourage all of our members to participate in. And if you do participate in it, you get a lot of benchmarks in terms of, say, gross margin, employment, revenue, which you can use when it comes to strategic planning, understanding how to prepare your business for the new year, etc. Additionally, every month we also have an ASA monthly staffing forecast, and that basically comprises projections of future trends within the economy as well as the labor market, and of course in staffing employment, that we update on a monthly basis. So that way our members are able to know what we're seeing and what we're anticipating to come down through the pipeline.
Like I said, I think the average owner and the average individual in the staffing industry knows they need to be paying attention and more attention to the economy, to the data that your team is putting together. And those resources enable everyone a very easy way to look at exactly what it is that you and your team are researching. So I appreciate you sharing all that with us. Noah, before I let you go and before I get you to our rapid fire round here, anything that you wish we touched on that you haven't talked about yet as it relates to the current US economy?
Yeah, I would highly encourage, just going back to our previous question, that everyone takes a look at our weekly staffing index. And the reason for that is that over the past 6 or 7 weeks, we've seen a substantial rise in the indice's value. What that means is that we are beginning to see gains in staffing employment. Well, why is that? The usual answer would be that around this time, employers are stocking up on their payrolls for the seasonal increase in economic activity that we always have due to Thanksgiving as well as Christmas. But the sheer rise that we've been seeing over the past couple of weeks points to something a little bit different. And I think what we're seeing right now is that because of these tailwinds that are known to be coming down the pipeline, employers are thinking that they will have more flexibility to be able to open their books back up again in 2026. And so what they're doing right now is that they're actually pivoting towards temporary and contract work as a way of testing the labor market. And this is actually indicative of trends that we have seen coming out of the Great Recession, in addition to the COVID pandemic, where we saw an increase in temporary work before we saw an increase in labor market activity overall. And that really has to do with the fact that employers are just they're cautiously optimistic, but they're looking to be certain. And so we are already, I think, in the very early stages of a recovery for our industry. And so therefore, myself, as well as a lot of other experts within our industry, are definitely feeling that sort of bullishness for 2026.
No, I appreciate you coming on the show, my friend. I got to run you through our rapid fire round while I got you, assuming you have 1 or 2 more minutes for me. The first, one book that has fundamentally changed your life.
Yeah, it's a really good question. So there's a book I've been reading quite recently. It's called Confessions of an Economic Hitman. Basically, and in a nutshell, it talks about the current web of international finance, how countries, rely, multilateral organizations in order to secure their funds for projects and development. And what really spoke to me is the way that some countries, their entire economy ends up being dependent on these external sources of funding, and just the sheer disruptions that a break in those flows of funds can cause to households and businesses if they were to be shut off. And thinking about the coronavirus pandemic as well as the current state of geopolitical relations overall, there are definitely going to be winners and losers within this new economic order that we find ourselves in.
One more for you, Noah. One piece of advice that you would give to somebody just starting in staffing and recruiting, what would you tell them?
Well, I think our conversation today is quite indicative of it, but just make sure that you have a good source of information, because your access to data and insights is going to be able to guide every conversation that you have with a client. It's going to shape how you approach building out your talent bench. And it's going to make the difference between making your year-end goals or not making your year-end goals. Having good access to information is all about being able to augment the value that you can bring to your clients. And so what I would say is whether you use an economist like myself, or whether you want to shell out money for, say, Bloomberg or something like that, just always make sure that you have a good pipeline of information where you can get your insights from.
Noah, I appreciate you making some time for us this afternoon. Appreciate you coming on the show and sharing all of your insights with us. It's been fantastic sitting down with you. I'm glad I got to know you at Staffing World. I'm glad we were able to connect here and get you on the show for a little bit, my friend.
Likewise. Thank you, Brad.